thrilled as we are for having you as our guest, we were also wondering a little whether you would be too special a case for even Stanford MBAs to emulate. I mean, you were asked for even before arriving at school. You became the CFO of PayPal during school. You took it public at age 28. Your early investment at YouTube was a huge hit. Most recently, Instagram, I believe, or was it Tumblr, was sold to Yahoo for $1.1 billion. $1.1 billion. But I'm curious to hear your own perspective, your own view on your path in the past 10, 13 years, whether it's a story of identifying the winning opportunities, or was it more of one that's about making good of the opportunities that fell on your laps, demonstrating success, and then becoming in the position to see and attract the best opportunities?
I'd say it's about making luck, creating the opportunities for good fortune to land in your lap, to use the phrase you used. I think it's actually part of the motivation for coming to Silicon Valley originally. When I applied to come to Stanford Business School, class of 2000, I didn't know exactly what I was going to do. I never had an ambition to be in venture capital or to be the CFO of a tech startup. I just had an inclination that there's a lot of opportunity in Silicon Valley, a lot of new companies being built, a lot of very smart people, and I just had an intuition that I needed to be here, and then I'd figure out the next step. So I think it's a lot about taking risk and being vulnerable to put yourself in a position where you don't know exactly what's going to happen, but if you take the safe path, you're probably not going to end up doing something special.
Mm-hmm. So let's go back to the beginning, or the GSB as your launching pad. How did you become the CFO of PayPal? Did you seek out that opportunity, or did Elon Musk ask you and you took it? And what options did you have? I'm interested in the internal thought process at the time.
Got it. So I met Elon through a mutual classmate at Stanford. He and I played on the rugby team together. He's another immigrant. He ended up in the dorm in the room opposite mine at Stanford. And he'd met Elon before, introduced me at the beginning of second year. And Elon made me an offer to join the company, but I couldn't because I was on a student visa and I didn't have work authorization. And so we continued the conversations, and to be honest, candidly, by the beginning of the last semester of school in second year, March of 2000, I'd run out of money. I came to the US in '98, right after the emerging markets currency crisis. And so the money I'd saved up in South Africa to come to business school lost 40% of its value overnight. And I couldn't make it through school. And so there was an opportunity for me to join the company and work part-time. I was very attracted to the company too, but there was a real need driven by having to pay rent the next month, which helped push me over the edge to start work. A lot of it was also with the support of my wife, or now wife. We were classmates at the time, and spent a lot of time talking to her about my decision of, do I go back to being a consultant? Do I join an investment bank? Or should I do this crazy startup in Palo Alto that's losing a lot of money, but it seems really interesting with smart people? And speaking to her about what might make me happier in the long run was really helpful in making the decision to join PayPal very early on.
And that turned out to be a great decision.
Yes, with the benefit of hindsight. There are a lot of bumps along the way.
So you took it public and you sold it to eBay at $1.5 billion, if I'm correct. And then you joined Sequoia. Again, did you at that point want to seek out to be a venture capitalist, or did Michael Morris just snatch you?
So it's more of the latter. When being at PayPal, Michael Morris was on the board, and so I got to meet him. I attended every single board meeting from the time of joining the company in early 2000, and so we got to know each other. And after the acquisition by eBay, Peter Thiel left, Reid Hoffman left, David Sachs left. Most of the senior management team in PayPal decided to move on to new things. And Max Lefchin, the CTO and co-founder, and I were the last two of the senior management team still at the company thinking about what to do next. And eventually we decided it was time to move on as well, new challenges. And Michael asked me to come and interview at Sequoia. And at the time, Sequoia had a spec. They were looking for someone who had a computer science background, who was working in product management at an enterprise software company. I did not meet the spec. And I used to joke that, which was true, unfortunately, that after every interview at Sequoia, I thought it was the last interview. And I was surprised every time they asked me to come back and meet a few more people. So I was really fortunate that they gave me an opportunity. I never thought I'd be in venture capital given my background.
Well, they make the right decision. So now you are well established, looking back, both from your own experience and your colleagues or other venture capitalists. What would you say is the simplistic formula of entering the venture capital world and succeeding as a partner? And I also ask you for a more nuanced formula and advice for students thinking about this path.
I think it's very hard to be in venture capital if you haven't walked in the shoes of a founder or an entrepreneur and been part of building a company. And to me, being entrepreneurial is not synonymous with being a founder. I think there are far smaller number of people who are the founders who come up with ideas. I wasn't a founder of PayPal. I didn't come up with the idea. But I joined very, very early on and took a lot of entrepreneurial risk to be part of the team to help build a company into what it is today. And so I think it's very hard for you to be in this profession if you haven't walked in those shoes. You can't empathize with an entrepreneur. You can't understand the challenges they're dealing with as they try to grow their business, as they deal with hiring and firing, as they deal with trying to figure out a business model, and try to build an enduring business. So I think one of the most important things is, if you consider a career in venture capital, is get some experience in a startup operating environment.
So you do consider yourself as a once upon a time entrepreneur. You have been an entrepreneur, you consider yourself.
I took entrepreneurial risk.
Okay.
So to join PayPal when it was a small company with 30 or 40 people with almost no revenue and a high burn rate, and we weren't even charging transaction fees at the time. It took a lot of entrepreneurial risk and fortitude to join a company that had a lot of challenges ahead. And I think it's part of the challenge that I put in front of students as they think about what to do after graduating from business school is to take risks and to deal with the risk of being embarrassed, of looking stupid. Get over the fear of looking stupid. Because I remember being at Stanford, and after I joined the company, and Meg Whitman came to speak in one of our classes, and she talked about how eBay was going to crush PayPal. And here I was sitting thinking, but I've already accepted. Don't tell me you're going to crush this company. I want to go work there and help it be successful. And you've got to accept those sort of risks. And I think it's a big part of being a successful investor as well, is many of the investments that you want to make are going to look to many people to not be sensible decisions at the time that you make that decision. And time will tell whether or not you're right. At the time we initially made the investment in YouTube, a lot of people questioned the decision. A lot of people were joking with me and sort of saying that it was going to be a poor decision, and it wasn't. But you had to have the fortitude to live with it and to accept that other people may question your judgment.
So you don't see a dichotomy between an entrepreneur and an investor. The reason that I'm asking is I see students who come to school, they're faced, they have all these opportunities, all these options, choices in front of them. Some of them, they're both lured by the prestige of private equity, venture capital, but also at the same time tempted by the coolness of becoming a successful entrepreneur. And some of them definitely have the intellectual capacity to be either, to go on different paths. So would it then just come down to your will, or is it something intrinsic in yourself that makes you either a PE investor, for example, or an entrepreneur?
So firstly, we don't consider ourselves as private equity.
I understand, right.
Because I think there's a difference between being an investor and being a company builder, and at least at Sequoia we think of ourselves as being company builders, because money is readily available from many sources today. Maybe that wasn't true in decades gone by, but today entrepreneurs choose to work with us because of our ability to help them build enduring businesses as their business partner, not just as an investor. So I think that is an important distinction. I'd say you need to have the operating experience in an entrepreneurial environment to have a good chance of being a successful venture capital investor. So I think that sequencing is very important. After the sequencing, I'd say it really comes down to your personal preferences. There are trade-offs in every decision that you make in life, and venture capital isn't a perfect profession. Neither is being an entrepreneur a perfect profession. They all involve trade-offs, and part of the negative of being in a venture capital position is that you're not part of the team day to day. When I was at PayPal, I was part of the team day to day, working 80 to 100-hour weeks, and we were all in. As an investor, you get to see many different companies and solve different types of problems, but you're not as close to the coalface as you are if you're an entrepreneur. And you have to judge for yourself, do you want to be a player who's on the field, or do you want to be the coach and mentor who's standing on the side of the field? And those two are very different positions.
Don Valentine, your founder, invested in Steve Jobs, or Sequoia invested in Apple 30 years ago. And then Sequoia has been making legendary investments in Cisco, Google, PayPal, LinkedIn, YouTube, Zappos. So if all venture capital firms, or at least the top tier ones, can be considered apples, so that they can be compared rather than apples and oranges, what do you think Sequoia's varietal would be, and why?
What sort of apple we would be?
Yeah.
Interesting. Granny Smith?
Granny Smith? Why?
I don't know, this hardy, it's not completely sweet. I think it's part of what comes with working with Sequoia is one of my current entrepreneurs acted as reference when we were looking at a new opportunity recently, and the way he phrased it to me was to this new prospective investment. He said, if you want to get an investor who's going to be easy, you shouldn't work with Sequoia and you shouldn't work with Roloff. If you want someone who's going to challenge you and help you build the most valuable business you can possibly build, I think you should work with Sequoia and you should work with Roloff. But it isn't always going to be easy. And so that's why... sorry?
You're a little tart.
A little tart, because I think that comes with, the best teacher or the best coach that you've ever had was probably not the person who was the easiest. It was someone who you respect because they challenged you and they pushed you. And obviously one can do that in a nice way and a not nice way. I'm sure we all have teachers that were just mean, they weren't helpful, but we think of ourselves in that same way. We're here to help companies build wonderful, enduring businesses, and that comes with its challenges.
Well, people often learn more from failures than from successes.
Don't remind me.
Really? I wanted to ask you what has been some of the most humiliating or stupid or frustrating failures, mistakes you've made, and what have you learned?
So let me, in talking about failures, I think it's also useful to talk about even the successes are not all up and to the right. And I think it's something that a lot of people miss when they read the news event about an acquisition or a company going public, and there's a presumption that it was all up and to the right all the way along. And certainly in my PayPal experience, I remember 3 near-death experiences at the company where fraud nearly killed us, or we were going to run out of money, or we just had so many challenges to deal with. And people forget about that in retrospect. And so even in the successes, there's so many instances where you nearly fail. There's a company I'm involved with, it's now a public company, Zoom, that we first invested in 10 years ago. And I'd say in 2004, 2005, it wasn't clear the company would make it at all. And today, it's a standalone public company. And so being willing to deal with the setbacks that you encounter, I think is important as part of this, being in this profession. One can't just expect that things will always go smoothly. In terms of some of the worst failures, I've made investments in a couple of companies now where we've lost all our money. On 2 occasions, I think we've lost all our money. On 3 other occasions, we've been able to sell the company, but we've taken a significant loss on the acquisition. And I've learned different things from each of the different situations. internally we do something called a post-mortem, where we analyze what happened with an investment and we try to learn from our failures. Did we do poor due diligence? Did we misestimate the market opportunity? Did we misjudge the potential of these founders? What was the reason for our mistake? It varies.
So when you were in the middle of that, before the postmortem, just trying to make it, did you lose sleep over it? Were you sweating?
I cried.
Oh, really?
I cried. Remember the first time there was a company in which we invested, it was $9 million, and we lost everything. We lost every cent of the investment. And I felt guilty. I thought I have a sense of responsibility for the investors who, like Stanford or other endowments and foundations who provide us with the money to go and invest in companies, and that I let them down when this investment didn't work out. So it's with a huge sense of responsibility that I think about those failures. But then again, it's important in our business to take some of those risks, because you won't end up making those spectacular investments if you're too timid.
Mm-hmm. Well, are you stressed about anything now? You're fairly well established and everything seems to be going right. Are you, what do you think about these days? What are you stressed about, if anything?
Am I in front of the best opportunities for tomorrow?
Yeah.
We have a motto inside Sequoia that we're only as good as our next investment. And so we're always conscious of making sure that we're in front of the best possible investment opportunities today. Is there an entrepreneur out there who is starting with a new idea today that I don't know about yet, but I'd love to be involved? That's what I worry about. For
the next 10 years, what would be guiding you in terms of what are your desires and aspirations for either professional or personal growth? Is your goal? So you've been flipping investments at about $1 or $2 billion. Is it turning something at $10 billion, or is it something else?
Yes.
Or what do you want your legacy to be, if you think about legacy at all?
I love to be part of more enduring companies. And that doesn't mean necessarily that they have to be standalone. I think of PayPal as an enduring company that happened to be acquired at a certain point in time. And so I don't mind necessarily that if a company is acquired and if the founders choose that they prefer to be part of another bigger company, but I want to be involved with companies that make a huge difference in the world, that touch the lives of hundreds of millions of people, and services that are around for a long time. And YouTube, is very similar to that. It's enduring to me to think that YouTube touches the lives of 1 billion people on the planet every single month. Even though I'm not involved with the company directly anymore and it's not a standalone company, that to me that feels good.
Thank you very much for speaking with me today.
Pleasure.